Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at Facebook on the daily and weekly time frame, an indecision doji clearly showing the bulls buying the dip, but because we had that higher open, that little gap up open, candlestick doesn't really favor the bulls too much. We're going to have to see some follow through here. And it's not really a bearish reversal doji because it is coming after just one green day following normal healthy consolidation. And so certainly not really at the top of an uptrend. It is at the top of a bullish move, which is why we need to be cautious up here. And it will require a break of the low of this consolidation of 126.78 for the bears to be confident in a pullback from here. So we did get some higher highs. Resistance is 130 psychological and then 130.23. And support is going to be the low of today, 128.38. And then that low of consolidation, 126.78. Weekly time frame had a bullish break, and we're seeing some nice follow through. We're not seeing a ton of resistance until the all-time high, and that level is currently just over $4 from where we currently stand. So under 4% away from an all-time high. The S&P 500 just hit an all-time high. QQQ hit an all-time high. So we're looking for the Facebook bulls to continue this uptrend. The question is going to be whether we see some further short-term consolidation or if the bulls are going to continue strong from here. So looking at the 5-minute time frame, there was a bit of a fake out on Facebook today where the bears did assume some control. And we saw weakness with lower highs and lower lows all day, rejecting from the 20-period 5-minute moving average a couple times, rejecting from the 100-period 5-minute moving average, but setting lower highs every time. And we had a tightening range where we had our low, our higher low, our higher low, so lower highs and higher lows getting very, very tight. And then right here was a bear break on increasing bear volume, breaking support, and we were just looking down at the low of the day. And then the bulls showed up out of nowhere in a really big turnaround. And that's when the SPY bulls, let's see, that was right around 1 p.m. Eastern. And look at the SPY bulls right around 1 p.m. Eastern. They were already in the middle of a big uptrend, so not really a reaction to the S&P 500. But either way, that would have been a potential fake out. But I would not have trusted the bulls on this turnaround until this lower high broke 128.93. So would have missed the first 20 minutes of that bounce. But you want to eliminate the risk because any bounce, anything under 128.93 could have just been another lower high in this clear downtrend on the 5-minute time frame. So it did end up being a very strong reversal. And if you were patient and waited to get in on the break of 128.93, you would have missed, let's see, you would have left 43 cents on the table in terms of buying the absolute bottom. Obviously, no one's going to buy the absolute bottom, but give up 43 cents and eliminate a lot of risk by getting in once the lower high pattern had broken. And then there was still plenty of upside to be had, up $1 from that entry signal level, just under $1, about 95 cents. So that's what I would have been looking at, but very clearly that bear break was a fake out as Facebook was one of the weaker names until it caught up at the end of the day. But look at this support, the 20-period hourly moving average. We held it the first two candlesticks, held it the third and fourth candlestick as well, and then increasing bullish volume there at the end of the day. So we know that hourly 20 period is going to be key heading into tomorrow due to how many times it tested and held as support, and it's currently at 129.12. We'll have to update that level pre-market and see if the bulls can hold it first thing tomorrow morning. So market very strong, Facebook a bit of a laggard, a bit weak. We're going to have to see a break of the high of today tomorrow at 129.90 to have confidence in the bulls after that doji formed. I appreciate you watching. I'll see you tomorrow. Have a great night.